What's up, YouTube? Today, we're actually doing a mini vlog here. Actually, I think it's the first vlog I'm doing on the channel. So you might be asking, why am I doing a vlog today? Well, look, we're going through a historic gold and silver crash right now. And there are a lot of people who are stackers, meaning they don't deal with paper. They deal with the physical silver and gold. And so, as you know, I live in Singapore. I moved here, and that's one of the reasons why I moved here, was access to the physical stuff when I need it. And I figured, why not take a little trip out today, see what the heck is going on with the market conditions at local bullion dealers, and try to get a sense of how the physical part of the market is stacking up, given all the crazy volatility we've been seeing in the past couple of trading sessions. So here I am here in Singapore in Clarke Quay. This is Clarke Quay behind me. And I came here because this is where one of the largest global bullion dealers, Bullion Star, has a branch located. Now, I've dealt with these folks before. I used to be a client of theirs. I think they actually run a pretty good service. And so it's something that I actually used and had a positive experience out of. And I'm gonna go drop by their branch today to see what is up, what is going on in their local store here in Singapore. Now, as you know, Singapore is one of the global hubs for silver and gold. It's essentially like the Switzerland of Asia, and it's very secure. The government is put into policies, like there's no tax around any transactions in gold and silver. You can enter and leave the country with as much gold and silver as you want, just declare it. And so on and so forth. That's one of the reasons why I moved here with my family to Singapore, in preparation of what's happening now. Actually, about 3 or 4, actually I moved here like 8-9 years ago. So this is like a 10-year plan that I'm executing. And now we're seeing it unfold kind of how the way I thought it would. And it will continue to unfold, I believe, in the way I described in some of my earlier videos. So let's see what is up over at Bullion Star here in Singapore on Monday, before the US markets open, after that crash we had on Thursday and Friday. So I'm across the street from the dealer, and I just wanted to show you, this is kind of 4 o'clock in the afternoon here, so it's not rush hour. It's kind of pretty less crowded than it would be. And the thing about Singapore is it's super safe. That's one of the reasons why we moved here. And so if you go to like a gold or any precious metals dealer, there's really no security guard. Nobody's with a gun in front watching the door. It's very, very, very safe, which is one of the big benefits if you're gonna buy and sell and store bullion here. I always put it in a vault, not in my house. But even the transportation back and forth to and from, it's exceptionally safe here. So that's one of the benefits of doing business over here. Now I gotta say, it's kind of weird being a 50-year-old dude walking around vlogging. I feel like I'm kind of too old to be doing this. But whatever, man. Whatever for you folks out there watching. Here we are in front of the Bullion Star branch here in Singapore. So you can see there's some people, but it's not like this huge line. And they have separate lines for online and physical precious metal dealing, right? So apparently there was a time when it was really packed, but that's not the case today. So it seems like it's not SHTF situation. Perhaps that was the case on Thursday and Friday, but not today. You can see, yeah, there is a bunch of people waiting in queue, but it's not like massively packed or anything. And they do have a policy notice that I'll get to, but it seems like they have a $20,000 limit for any of the transactions. But if you happen to be in Singapore and you want to check out their branch here, let me take a look at some of their. So apparently, they're the only branch that has stock here in Singapore. All the other dealers are out of stock. So if you're gonna buy something and sell something right now, Bullion Star would be the place. and take a look at their coin collection over here. So yeah, it is pretty crowded, but not, again, not unmanageable. Now I do want to show you that they have a policy they put into place here, right? Due to exceptional demand, minimum order of 20K. So that's something they just did that, obviously, given the volatility of what's going on in the past couple of trading sessions, has resulted in that policy change. But yeah, so that's what's going on over here. It seems like you can access and get in some bullion. They still have stock, but you got to go in with some big cash. So that's basically it. I mean, the bottom line is it wasn't really as packed as I thought it would be. There was no mass panic of people trying to buy or sell. I've seen it being a lot more crowded during the hype of when a lot of people are trying to buy gold. Remember those times? So that wasn't happening today, at least not in the hours that I went there. But what was interesting is that they did put in a $20,000 transaction minimum. And that's because of the just the amount of activities. And I think that kind of, in and of itself, killed the traffic, right? Because unless you're doing 20K, yeah, you're not doing anything there. So if you didn't know that, you would go there and leave. But if you were over 20K, which is essentially every single person in that store, I would think, unless they were just looking around like I was, you're moving at least a material amount of money, either you're buying or selling, but at least at 20,000 or above. And that's pretty significant, right? Because you're cutting off any small amount of transactions in terms of notional dollar value. So that is quite a thing. I don't think I've seen that before ever, where they put in a 20K limit to any transactions as a minimum. So that is something new and something to take consideration too. Whether or not you're trying to unload and sell your gold or buy some, you got to go over that 20K, at least with one of the largest dealers here in Singapore. If you go to the dealership store in person, you got to have that kind of cash that you want to move around. So having said that, let's head back to my studio. And we made it back here to my crib. And so I hope that gives you a little bit of a flavor of what is happening in the physical side of the world, where, you know, the largest dealer here in Singapore, they put in some controls, 20,000 to either buy or sell. So if you're trying to unload or buy something less than that amount, good luck, not going to happen. My understanding is that's also the only dealer in all of Singapore right now that actually has inventory that you can get right there and then. So there were some people in the store, but it wasn't like sky is falling and a long line out there, everybody trying to unload and sell. It wasn't that situation. That's just something to keep in mind as you hear and see all the stuff you see on the internet. At least here in Singapore, one of the major hubs, the largest dealer here, that's the activity. And I hope that adds to some of your information as you move on ahead along with me. Now, speaking of moving ahead and along with me, can't end the session in this video with a couple of screens to share and talk about. First of which is just to step back and understand how massive what has happened since, I mean, you got to understand, this is the third trading session into this, right? Not even. So it started on Thursday, Friday, and now we're about to start Monday. And if you just look at, you know, this move here, AGQ is a 2x levered ETF for silver. I mean, it was down 72%. And I just bring it up just so people understand, if you take leverage or margin, even in the form of an ETF, you just got to be careful. Manage your position size, manage your risk, and don't go YOLOing all into one single thing. Because, and I talk about this from experience, that's how you'll blow up your trading and investment account. Now, I just want to bring up here, as far as what I think is going to happen, on the 30th, before market started, okay, so this was end of last week, I said, after that breakdown, that first day, I said, I do think that gold is going to go down to 4,400 for about a 20% correction. Right, so I specifically said that's what I'm looking at. That's where I think we're going to try and do some kind of a bounce. And the reason I said that was because of this chart that I showed as part of the charts in that post. So I do daily updates on the Discord server. I share what I think is going on and what might be happening and how I'm trading around what I think might be happening. And I put it every day up there, and I do it for transparency so people can actually see how wrong I am, or the reverse, how correct I am. And they can make their decision for themselves in my track record. And there's over 1,500 people on the Discord server, and there's no way I can hide, bad calls I made. I mean, this is all out there for full transparency. People can say and see and say what they think about my past performance, basically. And so that's why I put it out there. So that's what I put out on last Friday. And the reason why I had that as a price target was the analysis I made from the last time we had this kind of a double topping procedure. We broke the neckline, went down, and this to me is proportionate to what we sort of did. We went up, we broke, didn't get up all the way, we broke the neckline. So I said, this is exactly where I think we're going to try and do a bounce. That's where I'm going to look into accumulating, which I put in a little bit as the moment we hit there, because that's what I said was going to happen. And that was the plan. That was a game plan from last week. So today, before markets open, gold continued to go down. Okay, there was no saving going on from China and all that stuff. And it went down, and look at where it hit. This is spot gold, which is the other charts that I built. It was an exact touch of 4,400. And from there, we were attempting this rebound. So, I tell people on Discord, I'm really lucky, or it's just coincidence that I happen to be right. But that is what I thought was going to happen. That is apparently what is going on. My idea here is perhaps it's a V bottom for another kind of a run up that'll fail. Or we will retest this bottom here at 4,400, create some divergence and go up from there. I'm not Nostradamus, I don't know, but I'll trade around that. And of course, I'll try to generate returns. So I don't try to catch falling, no, I have this idea before stuff gets really bad, and when that target is hit, then I take some action. That's it. And I don't talk about gnomes out in Europe who can call bottoms. All right, anyway, let's move on. So what has been happening over the weekend? Well, a bunch of stuff has happened. First of all, what's going on with Shanghai, with China suspended trading on silver, right? And oil too. Oil fund trading. Because of the extreme volatility, the circuit breaker was hit. So actually Shanghai shut down. It shut down, SGE, SHFE, until tomorrow because of circuit break. So the whole idea of Shanghai is because, there's shortage and Shanghai is going to pull. No, that did not happen. Shanghai collapsed to the max. It could collapse and it got shut down. So there goes that whole Shanghai is going to save the world narrative. That did not happen. Didn't happen on Thursday night into Friday. Didn't happen over the weekend as we saw just now. They also, what they did was they increased the margin levels. They increased it from 20 to 26%. And the price fluctuation limit was also adjusted, right? So it can stomach even more volatiles, both up and down. So they made these changes. Now we know that the COMEX made changes going from 11% up to 15% now. That was also announced after market close over the weekend. And what else? Well, India increased its margins to almost 70% at 68%. So the the MCX CMX, all these acronyms. The MCX increased it from 268, almost 70% margin percent requirement for silver now, if you're going to buy that. And that kind of tanked the MCX, which was actually open in a special trading session in India on Sunday, and it tanked. And that's how we kind of knew Shanghai was going to tank the moment it opened, and Shanghai tanked. So there is all this going on from the exchange level. At the exchange level, that is what's happening. It is interesting. It does sound and seems coordinated. I'm not into conspiracy theories and tinfoil hat and all that stuff. You can go to other channels if you want to, grab some potato chips and talk about how the bad guys are doing the bad guy things. But if you just look at the timing and everything, okay, and you have an objective, which is the whole point of FoFty, an objective point of view, what's going on, yes, the timing of what's going on, given the circumstances and context of the situation,
it does seem a little bit coordinated, which makes sense because they need to control this market. It had gotten way out of control. It really did. You can't have a market like gold or silver explode like that forever. And like I said, vertical up results in vertical down. And we've had the vertical down. So moving along here, I'm going to talk a little bit about some stuff going on the internet that I keep seeing. And, I just, look, the first thing is there's all this stuff going around about, oh, look, JP Morgan, again, the bad guys, they're manipulating the silver price. Look, they sold right at the low. They covered their shorts right at the low. This is not random. No, it's not random. I'll explain to you why. So they're bad guys, they waited for it to hit the low, and then that's when they covered their shorts. And, after that, of course, prices goes up. So that was the most profitable for them to cover their shorts. JP Morgan, they're bad. They got fined $1 billion almost in, a couple of decades ago or a decade ago. And so, yeah, these are evil people and let's get angry at them. Occupy Wall Street. I'm telling you, that kind of thinking, it'll get you angry. It might not make you a lot of money. And that's why I don't participate in that kind of stuff. It just doesn't. Why be angry and not make money? Why not have them work for you and make returns? Which is what I said earlier. That's better. That's the way I operate. They work for me. They don't know they work for me, but they work for me. And I generate returns. Isn't that much better than being angry and just losing money left and right? I don't understand why you want to do that and be right. It's not about being right or wrong. I just want to say you can be wrong and make returns. And that's the best kind of return. You were wrong, but you made money. Dude, it's like finding money in your clothes after running the laundry. And it's like, oh, dude, I had a $100 bill in my jeans. Oh, that's great. It's like free money. That's what it's like. Who cares about being right or wrong? That's just ego and bragging rights and having a lot of followers. And, that's just vanity metrics for your ego. Who cares? I don't mind being the wrongest person in the room. As long as I'm generating returns, I don't care. You can be wrong and make money. It's the best way. Being wrong and making money is the best way to make money in my experience. That's the best one. Better than being right and making money. Now, if you look at the report that everybody's talking about, JP Morgan is so bad, it's terrible. Look, first of all, you understand the ORG column here, it says C. They just look at this and say, oh, they're bad. It's C. You know what the C stands for in this report? That C stands for client. It wasn't their stash. They were selling on behalf of a client. That's the first thing you got to... Okay? That's the first thing. Nobody talks about it, but that is what that C stands for. And it was a C for this. It's not their own stash. Number one. Number two is, yes, they did cover the short right around that price, but you got to understand what happens when you cover a short. You buy back the shares you sold earlier. That is how you do shorts, right? You buy something and you sell something and then you buy it back later at a lower price, you make money. That's how a short works. So what did JP Morgan do? Yes, for a client, perhaps it could be other banks who don't know. They're bailing out other banks, maybe, but it wasn't their stash. Let's just get that clear. For whatever client, they covered their shorts, meaning they bought a ton of silver contracts to cover their short. That buying, that sudden buying to cover their shorts might have actually put a bottom in. Because if all of a sudden it's going down, 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 and then suddenly there's a big buyer who buys a ton all of a sudden, that might cause a bottom to form. Because all of a sudden there's all this buying happening out of the blue, huge buying, and everybody sees it and starts buying, that would actually put a bottom in, or at least an interim bottom, which it was. It wasn't the bottom, it was an interim bottom, right? And so in effect, them covering their shorts resulted potentially in a bottom being formed because of them buying to cover their shorts. So you might spin the narrative and say, look, they're so bad. They knew when the bottom, exactly when the bottom was, and that's when they covered their shorts, perhaps. But for me, the more logical story is the price went down low enough that for their client, it was good enough to take profits or get out of the short position that they covered their shorts, which meant a ton of buying happened at that point, all at the same time, which caused other people to buy and other CTAs and algos to buy, which might have put in that short. So them buying was actually the reason why there was a bottom. As simple as that. But nobody talks about that, right? Everybody likes to talk the other stuff because then you can get angry and get angry at them. And make no mistake, they aren't I mean, they've had a very sketchy and shady history, right? They've been busted. They've gone to jail. They're head traders of the precious metals group in JP Morgan. Gone to jail. So no, they're not angelic by any means. But let's just keep an objective head here and not get swimming in the whole like conspiracy theory, they're bad, and so every single thing must be bad, and get angry and angrier and angrier about how everybody's sticking to the little guy every single time. They do stick to the little guy, but it's not every single time. Let's just get that straight. Okay, the other thing was, there's all these, and I know Chris, I think I used to watch him during the COVID, if it's the same guy, during the COVID, talking about a lot of like COVID related stuff. But he was saying like, where's the circuit breakers for the CME? And you know, like I said, the Shanghai exchange changes triggered their circuit breakers. So it's like, well, what happened to the circuit breakers? You know, we first tripped at 10%. We're way past 10%. Look, 18% move within 1 hour. What happened? What happened? I'm sorry to tell you, but you can't arbitrarily pick a minute within the hour and then say, okay, from that minute to the next hour, that minute, it had more than a 10% move and say, oh, why didn't it trigger? That doesn't work that way. It doesn't work that way. The look back hour, according to the CME circuit breaker, is not, what is this? XX hour and 36 minutes to the next XX hour and 36. It starts out on the hour. XX hour dot 00 minutes to the next hour on the money from 12 p.m. to 1 p.m. 1 p.m. Not 12:36 p.m. to 1. No. And anything that happens within that 1 hour, no matter how up or down, doesn't matter. All that matters is the strike price at the beginning at 00 minutes, and then the strike price in the beginning of the next hour at 00 minutes as well. Hour by hour look back window. And what is the difference between that price? If it's more than 10%, then yes, the circuit triggered. But that did not happen, right? Intra, and if you pick weird minutes between, yes, you could be more than 10, but that's not the way it works. And then you get angry, and then there's conspiracy, and that's again, no, don't go there. Now, you might make the argument that they knew of their circuit breaker and they timed it so they just wouldn't trip it, and that's how they did it. Okay, possible, like technically we can't prove or disprove that, but this kind of other stuff is just, it's just wrong. It's just wrong. So I'm sorry to say, it is. So try to avoid that kind of stuff. Again, being angry at them and based on being wrong information or wrong analysis is the worst kind, because you're getting angry based of incorrect info and wrong analysis, and then you're getting angry for what? Let's try not to do that. Let's just try to make returns. The other thing, this going around, look at it, 240,000 views. Oh my God, that's 250,000 people thinking, oh my God, this was earlier. Shanghai is now 67% pre 54 from this metal charts website. 250,000 people, and then they got angry. Guys, don't do this. This is how you get angry and lose money. Because that same website later on went negative pre. This metals exchange or whatever website. And like I said in the last video, don't do that. Go to the official Shanghai Exchange, Shanghai website, the exchange website itself for the SHFE, okay, and the SGE. Go directly to the exchange website. They will show you what the prices are for spot silver according to their definition of what it is, which in those two cases do not include VAT, even if the SME does. Go there and look at it. Don't go to like some metal. And then, so people then go to this, I don't know, this metal exchange website, and then they take screenshots and put it on X, and then millions, hundreds of thousands of people watching. Oh my God, it's impossible. This huge Shanghai, so much higher. They're going to come and save us because the price when Shanghai opens is going to go up. This huge gap can't exist. And if you drink that Kool-Aid, and then you buy, you're going to get toasted, like if you did, because Shanghai opened and it crashed down to the max it could, right? Limit down crash. Now, let me tell you some of the stuff that I do find really interesting. It's the opposite of bad analysis and fake news. is what's going on with Bitcoin. And I'll tell you, I have Bitcoin. I have both Bitcoin, gold, and so I don't know why people say it's got to be either Bitcoin or precious metals. Why? Why can't it be both? It's both for me. It's great. They don't both go up vertically, but they both could potentially be bridges. Once the financial system melts down and we build a new one, those could be bridges to whatever the new one we create is, for sure. Why not? Don't go binary. Don't get religious. That's just not the way. I tell you. I mean, you might do that because you have other reasons, but if your goal is to generate returns and to protect yourself, don't do it. Don't do it. This is why I think Bitcoin, and I've been saying, Bitcoin is probably not going to bottom until October this year. And I'll tell you why. It's because of this cycle. And no, it's not the 5 or 4 year cycle. It's this particular cycle. All-time high in 2015 to all-time high in 2017 was 1,064 days. All-time high in 2017 to the all-time low in 2018 was 364 days. The all-time low after that to the all-time high after that was 1,064 days, and then the all-time high in 2021 to the all-time low in 2022 was 364 days. So the next all-time high would be 1,064 days after this, which would be October 6, 2025. And that's what this was saying. And this was posted in 12/12/2023, 2 years before October 2025. And if you go check your charts, Bitcoin's top, or the ATH of the cycle, was exactly October 6, October 2025 was the exact top, down to the day. And so somebody 2 years said 2 years later this would be the top down to the day, and that actually happened. And if that happens to be the case, then maybe the all-time low, right, would come in 364 days after October 6, 2025, which would be October 5th of 2026. Now, that is based on a cycle, right? All-time high to all-time lows. And the cycles are, actually, it's kind of spooky, correct down to the day. We're talking down to the day. And 2 years before it happened, called the top, and the top was down to the day correct. And ever since then, it's been going down. Now we're in end of February now, in 2026. So 2026 October is what? We're in month 2 and month 10, so it's 8 months from now. And it's been going down ever since October of last year. So far, so good. My thing, I think, is October is around when Bitcoin is going to bottom. And I bring that up because Bitcoin leads the way. It's first is Bitcoin, then the precious metals, then the stocks, and then real estate. And so the dominoes fall in that order. And today, like I said in my last episode, stocks are probably going to open low, right? And lo and behold, stocks are underwater right now in the futures markets before market open. So anyway, this is why I think we're going to have quite the year in all of those asset classes going forward, and how I'm prepared and positioned for them to, again, the bottom line is to generate returns. But this is pretty crazy, right? And, you know, this person talks about the simulation. You know, I talk about the simulation. So anyway, let's leave it at that. Now, here's the Bitcoin situation. We break this. It might be a false break and go, but the point is we're into October, we're probably going to go down. I would hope it goes down to where I DCA'd in before, which is in 30,000 is when I accumulated. If it goes down 30,000 again, that'd be great. If it breaks 50,000 along the way to October, I'll start DCAing in. Hopefully it goes down to 30, and I'll accumulate that much more of BTC along the way. And, you know, Kramer came out and said, all right, Bitcoin 77, figure buyers coming, wants to move it back to 82. Okay, you know, inverse Kramer time. I'm sorry, but inverse Kramer is a pretty good track record. And, you know, I bring up Tom Lee here. Just, you got to be careful who you're following and listening to online. This guy was saying Ethereum, you know, was going to go up, up, up. BTC was going to be in hundreds of thousands by end of January. Well, look, we're in February now. Not happened, right? And now he's under $5.6 billion in whatever he was peddling to all the people he was going into. So, you know, if you bought into this whole Kool-Aid stuff with him and believed him that by the end of January, Bitcoin and Ethereum would be a certain price, well, that didn't happen, and he's down quite a bit. And what's going to happen now? Well, I don't know, right? If what I believe is going to happen, Bitcoin is going to go down until October of this year, I don't see how this is going to be correct. So just be careful of who you listen to. People like Tom Lee, permabulls like that. This guy was very wrong in 07, 08. At the end of 2007, he said S&P market is going to shoot up to the moon and double. This was still, when he was still an analyst in Morgan Stanley, and then he, obviously, I don't know if he got fired or he left, but he created his own thing. But he was dead wrong. And if you listened to him back then, you would have lost your shirt, because we had the great financial crisis happen. And it did not double. In fact, it halved, right? S&P went down to 666, which is a crazy number for it to go down to before it bottomed out. So yes, so equities are going down. They might have some relief rallies, but it's still in the negative. And that's not a good sign, because I do think equities is going to follow what happened with precious metals end of last week. And, there seems to be a general liquidity drawdown going on around the world. So the Kospi in Korea is also going down, and they had to halt sell orders. And so you got to be very careful of what's happening. Now, going back to what I think is going on with gold is, yes, we hit my target. Is that the very bottom? It could be, I don't know. But, the ideal situation for me, which I'm closely watching, is for it to retest this and then go up. Maybe make a slightly lower low and create divergences with the other technical indicators in the MACD and RSI. If that happens, we go a little low or test around this low and then successfully bounce off it with negative divergences, that would be great entry point for me, because it hit my price target that I thought would go to, and I'd probably start accumulating some, not for gold go forever, but for it to do a counter trend rally, which may fail and go back down until proven otherwise. But I don't mind riding up counter trend rallies as gold goes into a longer term correction and consolidation phase. And so that's how I'm kind of positioned myself. Let's see what happens. Nobody's Nostradamus. I trade what I see. I do make some price targets and see if it hits. They tend to be accurate, and I follow them and I share them on Discord. Discord is probably going to open up in about a week or so. I think we're getting there. And again, anybody can join. It's free. It's just we don't want to open up and have too many people join at the same time, because it causes a lot of noise, and the signal to noise ratio gets lost, and that's defeating the purpose of the Discord. So the only thing we do is we rate limit the amount of joiners just to maintain the quality. So I hope you understand that. And when it's open, I'll announce it on the next YouTube channel. So I hope you enjoyed this. I mean, I think it's the first kind of like back-to-back episode I've done, but I wanted to just get, for all the stackers out there, some perspective on the ground here in Singapore, being what it is on the large dealers shops. And I went to the largest one. Who knows, I might be back or go to another one every so often and see what's going on there during times like this. If this was helpful for you, please, again, the mission here at FoFty. Do like and share and subscribe to the channel so we can get the word out. And I will see you in the next episode. Peace.